Hey guys, it's Max. Today's Bone Up on Options class is going to be a quick one, just probably about 15 minutes long. I have an interview with Cy Katara at 1 o'clock Central. It is now 12:36 Central. All right, so I want to talk option strategies. Bone Up on Options. We're going to, basically what we do is we copy trade Jay Pestrochelli and what he's doing in ULTY. That's kind of my little latest grift. So let's see how that's going. So first of all, let's check and see what the market's doing. Boy, look at this S&P on the high for the day. It opened down here. There was a gigantic gap. It opened down here and it just went roaring back the other direction. Now this between these two red lines is this post-Trump election gap. And I said that buyers, if it was a real deal, if the Trump election was real and Wall Street was really bullish on it, that buyers would have reappear if the market dipped into this gap. So we'll see. We're bullish as long as the market's above this gap, and we're bearish underneath it. But we'll see. We'll see what happens. Anyway, market looks good today. Market's bouncing. Let's see what volatility's doing. Volatility's down since this morning, and of course the market's up since this morning, so that makes sense. But over the past couple of days, volatility on Friday started to blow up, and the people that are trading volatility have hedges on right now. And now that doesn't always correspond with the market that goes down or crashes, but our volatility system actually Friday about noon went from bullish to bearish. It had been bullish for about a week and a half before that, and prices had been firm, but then the market rolled over and went bearish, and now we're going straight sideways. So we'll see what materializes. Okay, but I have three trades to show you guys today. The first one is GME. This is a loaded dice, and this is a YOLO. This is a way to YOLO. You bring in about $96, but it costs $500 to put it on. So it's about a 20% yield, depending on what you get it filled at. These prices were about an hour ago. But your credit, I'll share the trade, but whenever you're filling this, you do it for a credit. Well, whatever the credit is, needs to be at least 10% of the max risk, which in this case, it's more like 20%. And really the higher, the better. But you do this trade, you want GME to go up, go down, stay the same, just not to drop more than 7%. Okay, by the end of the week. Or actually, this goes out till next week. Let's move this back in. Well, we'll take this one out another week. That's the way I already did that. All right, so I'll share that one with you guys, that the GME trade, but you have the 23 and 25 strike put spread. You sell that 3 times and you bring in an income. All right, that's how these trades work. You bring in about $150. Well, you take 50 of that dollars, $54, and you buy this. Well, it was $54 when I put this on. Now it's $82, but you buy this 30 call one time, not 3 times. So you have 3 spreads, 1 option. If you get the outlier move up, you can, you aren't capped out. You won't just make the $150 you'll make that you would have made if you would have just sold the put spread. You'll make the $100 that you made for selling the put spread, plus you'll make $400 or $500 extra because you'll have this call that actually went in the money and made money if we get above 30. So anyway, that's an interesting trade. That's a decent way to, and that goes out 2 weeks. That's right, because GME is not an earnings trade. So that goes out a week and a half. That goes till next Friday. So that covers you till next Friday, in case we go to 40 or 50 or whatever. But if we don't, you still get your income. That's the whole idea of that. The income, the 20% income that you get is supposed to make the trade worthwhile enough to do, even if the market, even if the stock does, even if you don't get the move out of GME that you were expecting. Okay, so we have Palo Alto Networks. This is an earnings stock. They have earnings after the bell. Same trade. Sell 3 put spreads to buy one option. This is an extremely liquid. Look how liquid these options are. I mean, there are tons of volume, tons of liquidity. They have tons of strikes. Anyway, this right here is a decent way if you have $2,500 and you want to take a bullish shot at Palo Alto earnings. You can earn $345 off the get-go. All you're asking Palo Alto to do is not drop more than 5.5% after earnings in 3 days. That's all it has to do. It's not drop lower than 365. That's all you're asking. Right now, the market's trading 385 or 390 almost. That's not that big a deal. Hopefully, you'll get the move up you want and cash this in for a $5,000 winner. All right, I'll share that one with you guys as well. That's a bullish Palo Alto Networks. And here's a bearish Palo Alto Networks. I did the opposite trade. Now, you only have to sell 2 call spreads. You don't have to do a 3x1. I did it 2x1 this way. But this way is if you want to take a bearish shot at Palo Alto Networks earnings, you're just asking Palo Alto Networks not to go up more than 6.5%. Just don't go over 415 and you're fine. And if you get a big miss and you drop 25%, that'll work too, because you're going to make $4,000, $5,000, $6,000 on this trade, right? So that's a bearish way to take a shot at Palo Alto Network earnings. So now we have a bullish GME trade, a bearish Palo Alto Networks, and a bullish Palo Alto Networks. So I'm going to share all of those trades with you. They all use the same philosophy. Let me show you how one of those trades works when it works out. Here's a bullish loaded dice trade in the SPY. This one is working out because the SPY has been bullish. This is for the end of the week. This expires on Friday. For the trader to be successful in this one, all you want is a SPY not to drop lower than 578. You get an income when you put this on. $200 on about $1,600. It's 1/8, so it's about a 12% income. And if the SPY happens to blow up the rest of the week and you get a big outlier move, let's say we finish the week at all-time highs. Wouldn't be at all surprised if that happens, because we've already rejected. This morning we went down and rejected back into that gap again. I'm just saying, wonder if we just barely make an all-time high, like 601 on the SPY. Let's see what this trade's worth. $736. That's not bad considering you got a $200 profit just to put it on. So then the total profit would be $736. So that means the trade would make an extra $500 profit you could cash this call in on. So you'd have the extra $500 that you made off this call's appreciation, plus the $200 you made as soon as you sold it. It adds up to the, $700 or $800 profits you would get if the market goes back to all-time highs, goes to SPY. I wonder if it goes to 605 instead of 601, then it's worth $1,000. So the $200 you receive for the income, plus the $800 comes from this call appreciating, right? So these trades I've been showing you lately we're selling puts to afford to buy calls generally, unless we're bearish, in which case we're selling calls to buy puts. But these are risk reversals or reverse risk reversals. And that's pretty much what we're focusing on lately. As Jay starts doing different kinds of strategies in ULTY, we'll start adopting some of his other ULTY strategies into our own strategies. But right now, I think this is a great income trade. I think it's a good way to play. So let's see, some of these other ones are working out. I showed you guys how to do one in Disney, and it was up like $700 yesterday. It's only up $400 today. But here's the profit and loss graph for it. If you did put this on and you followed my advice, take this off. There's no reason to wait, and then something happens overnight and Disney drops, and you have a nice profit in this and it turns into a loss. Take this off. Jay has this same trade on right now at ULTY. He had it on 1,000 times yesterday or Friday. He took half of it off Friday. If I was him, so he only has 500 contracts. If I was him, I would take the rest of them off. You have a nice profit in that trade. Here it is right here. Here's Jay's trade. It's a Disney trade. we can project his profit right now in the trade is right around 430 or something. If he holds it to expiration, he can make 490. There's an extra $60,000 worth of time decay he could catch. But if the market craps on him, he can lose the whole 430. I would just take that off the table. And I bet he does. So let's look at the earnings schedule. I bet Jay sells that, takes it off the table, and I bet he puts on a trade in Intuit because he doesn't have anything on an Intuit, NetApp, maybe even Deere or Baidu, or maybe even PDD. Wouldn't be at all surprised to see him have on a PDD or Baidu color when he gets out of Disney. I bet he takes the rest of that Disney off today. But anyway, it ought to be interesting to see. All right, I have another interview in 13 minutes, so I need to go upload this video and go do my other video or go do my live stream. All right, guys. Well, thanks for watching this. I'll share all three option strats in case you want to try all three trades. We have a bullish Palo Alto, a bearish Palo Alto, and a GME in case you want to try any of these yourself. All right, guys. I appreciate you. Have a good day.